This week's market reveals a dynamic real estate landscape characterized by low inventory, bidding wars, varying sales trends, and the pivotal role of interest rates. I'm Tony with Clarkson Santoro, and this is our real estate update for the week of Friday, September 15th. We know that selling or buying a home can be stressful and very confusing. In this series, we use our more than 50 combined years of experience helping clients sell or buy homes to explain what the latest San Ramon real estate market trends mean for you as a homeowner or as someone who is looking for a house that you will love to call home. This week, we saw 28 active homes on the market, which is more than the 21 we had last week. The average asking price of those homes was up to $2,305,000, higher than last week's average of $2,264,000. 5 homes went pending this week, which is more than the 3 last week, and the average asking price of those pending homes this week was $1,814,000, which is slightly higher than last week's average of $1,722,000. And 10 homes sold this week, which is significantly higher than the 4 that sold last week, with an average sales price of $1,935,000, which is also significantly higher than last week's average sales price of $1,425,000. So now that we've analyzed the market's performance over the past week, let's delve into the broader trends that provide insights into its overall health and potential future direction. Before we proceed, if you find this information valuable, why don't you go ahead and subscribe so you will always know about the latest trends in the real estate market, and share it with a friend too. Everyone deserves to be in the know about their local market. All right, let's take a look at the market indicators. Starting with inventory, our inventory has seen a notable uptick with 7 new homes added this week, marking a roughly 33% increase from last week. This was somewhat expected considering that last week was Memorial Weekend, typically a quieter period for new home listings or new home sales. However, this week saw a doubling in the home additions, reaching the highest inventory levels since August 17th. What's more concerning, though, isn't just the growing inventory itself, but rather the slowdown in new pending sales, which is causing the inventory to accumulate. It's crucial to keep an eye on the balance between new listings and new pending sales moving forward. Speaking of new pending sales, our turnover rate has dropped for the first time in 2 months. Our turnover rate is fallen below 100%. We had previously discussed the likelihood of this happening last week, cautioning that the perception of a robust market was built on a small data set. As a result, our turnover rate has swiftly declined from 2.5 times a month to just once a month in less than 2 weeks. This is certainly a cause for concern, and we must now closely monitor our new pending sales. While historically our pending sales have been relatively low, it's worth noting that our exceptionally low inventory has played a pivotal role in maintaining the strength of our property values and prices and our hot turnover timelines lately. The over-under metric relies on homes that entered escrow between 30 to 60 days ago, making it a lagging indicator of the market's strength. Currently, it indicates that the market is still holding its strong seller's market position. Homes are, on average, still selling for just over 3% above their asking price, a clear sign of a robust market and competitive bidding wars amongst buyers. However, as the market shows signs of slowing down, we anticipate that this percentage above asking will also decrease. Our average sales price metric has finally taken a positive turn, showing a 1% increase in value. We expect this trend to continue given that the 30-day rolling average prices of pending sales are currently more than $100,000 higher than the current selling prices. Coupled with the homes selling above their asking prices, we anticipate a 6 to 8% increase in the sales average over the next 3 or 4 weeks. This creates a somewhat mixed signal in the market as we anticipate a slight slowdown due to increasing in inventory, while simultaneously observing a spike in sales, which is the opposite of what we've been seeing for the past couple of weeks. This dynamic may be confusing for those not closely monitoring all the metrics. In terms of the financial outlook for the tech sector, we have some positive news to report. High-tech stock equities have shown a 2% increase this week. While it may not be a massive leap, it is certainly encouraging in a market that can benefit from any positive momentum that it can find. It's also worth noting that any positive developments in the tech industry often translate into increased buyer confidence in our real estate market, which is a promising sign in the midst of an underwhelming week from the other metrics. And unfortunately, speaking of underwhelming week, there's some less favorable news regarding interest rates. They have increased by 6 basis points, now standing at 7.18%. This rate presents a notable hurdle to the market's ability to regain its equilibrium. The majority of homeowners currently hold mortgages at around 3%, and understandably, they're hesitant to sell their homes and forfeit these favorable rates in favor of the new rates exceeding 7%. This trend of homeowners staying put is likely to persist unless rates drop by at least 1 to 2%. As a result, the market may face a shortage of inventory like we've been seeing for the past several months, primarily relying on, any increase in inventory will primarily rely on aging baby boomers selling and forced sales due to job relocations for new listings. Overall, this week's market developments present a complex picture with multiple concurrent trends. Inventory remains low, driving buyers into competitive bidding situations to secure acceptable offers. However, pending sales are showing signs of decline. Homes priced below $1.8 million are selling rapidly, while higher priced properties are experiencing longer time on the market as expected. The most pressing concern at this junction revolves around interest rates, which do not seem poised for a decrease in the near future. These rates are a key factor shaping the current real estate landscape, and their impact will likely continue to influence market dynamics. Thank you for joining us for our weekly update. We hope that this summary and commentary helped you understand how our market is impacting your options. If you have specific questions about navigating the market to buy or sell a home, don't hesitate to drop a comment down below or reach out to us directly. We're here to help guide you every step of the way. And if you did find this information helpful, share it with your friends, and don't forget to hit the subscribe button and the notification bell to make sure you'll always be in the know about the latest real estate news here in San Ramon. Have a safe weekend, and we'll see you next week with a new update.